Hi guys, I'm Anthony Beardsall. Thanks for joining me. Going to have a look at a 1 minute opening range trade on the DAX from this morning. And the opening range play is one that is repeatable. It's one that occurs on a regular basis, not every day, but on a regular basis, and often produces the first couple of trading opportunities of the day. So we're on the 1 minute time frame chart. These are quick trades, call them trades or scalps, whatever suits you. Doesn't really matter what we label them, does it? But ultimately they're quick trades. We're in and out within 5 to 10 minutes, no more than that normally. And if you've watched any of my videos in the past, then you'll get an idea as to how I set my charts up, how I prepare for my trading during the day. So let me just talk you through this chart that we've got in front of us. We've got a couple of horizontal levels, a few horizontal levels on here. This green line is yesterday's high. This yellow line here is yesterday's close, and this blue line is yesterday's open. So I always plot the horizontal levels of the important price points from yesterday on my chart. And the reason that I do that is because very often these price points from yesterday are tested in trading throughout the day, the following day. So we've got price action here from 7 a.m. That's when the pre-market DAX opens, and the full market opens at 8 o'clock. And we've got the price action right through to 9 o'clock. So a couple of hours worth of price action on the chart, and that's very often all that you need. We can make trading as complicated as we like. I love simplicity. I like keeping things simple. There's so much to think about in terms of trading. The more simple we can make it, the better for me. And so you can see on the chart here what we've actually got is we've got the pre-market opening here, and at just before 8 o'clock it's just made a low here. So the market's been in a downward leg, and we can plot a trend line across these highs here, and that will denote the downward leg. So as the market opens, the market pressed down and it closed the gap. It's only a 8-point gap between where it opens here and the yesterday's close. So it closed the gap between the open of today and yesterday's close, and that happens on a regular basis, but the gap closed trade, if you like, wasn't actually tradable today. Too small a gap. So the market pressed down, and it left a spike, came down, went up immediately, and the 8 o'clock bar closed just below this blue wavy line here. So we've got the 8 EMA exponential moving average and the 20 exponential moving average, which is the red line on the chart here as well. We've also got the MACD indicator on the chart here. These are slightly altered settings for the, not standard settings for the MACD, and I'm using 3, 10 and 16 settings for this particular indicator on this chart. So we've got a downward leg. We've tested yesterday's close and the market's broken up. You can see as soon as the prices cross and break the trend line, the downtrend line, then everybody's in agreement for a period of time that the market's going up, and this created the first upward leg. Now, we're expecting the market to meet some kind of resistance at this high here or at the high of yesterday. Somewhere in between these levels, you're expecting some kind of resistance. And when these indices, the FTSE, the DAX, the Dow, the S&P 500, when they open, they very often produce a couple of moves in the opposite direction. So downtrend followed by an up leg, followed by a down leg. This is very often what happens. And so what we're going to do is we're going to see whether there are patterns within the price action that we can use to trade this reversal upwards here or this reversal downwards here. And on this occasion, the market zoomed up, pulled back slightly to the 20 exponential moving average, and then started making its way gradually up towards this level here. and it was a gradual move up. There's a wedge formation in here as the market's moving up, gradually making higher highs, testing the low. It's very uncertain, slow moving. When this type of action occurs, you can expect at some point in time that the market's going to reverse again. There's no conviction really in this move upwards. It's hesitating. There are lots of bearish bars, red bearish bars in here as well as green bars, and the market's making a wedge formation almost up the chart. And when it does that, if this move here was full of green bars, no red bars, then you'd probably expect it to move past this high here and upwards towards yesterday's high. But on this particular occasion, we're looking out, when the market reaches this level here, we're looking out for what does the market tell me about what it's going to do next, and does it signal to me that it's peaked at this particular level here? And if it does, then what opportunities have I got to take the trade back down again? So what we actually got up here is we got a perfect top, perfect for me anyway. So the market makes a high, and we're talking about closes at this point in time, and we're talking about actual price highs. So you can see this particular bar closed here. The market came back down, tried to go higher, failed, and then went up again. And when it goes up again and it fails to make a new high, then we're on the lookout for price action that allows us to get in and take the trade back down towards the day's open. And an important price point here, 12,600 is a round number level, so that provides a good target for any trade coming back down. Round number levels are important, of course, in trading. And so what we've actually got then is we've got a lower high. The close here is lower than this particular close here. So when a market's in an up leg and it's making higher highs, you're on the lookout for a lower high. A lower high indicates waning momentum and a potential change in market climate. So again, we can draw a trend line up here, and you can see that as the market comes down from this high here, then it breaks the trend line. And I'm always looking for new legs that start with a mini trend line break. Let me move that out of the way so we can see what we're doing. So the market makes a lower high. It makes a lower high and then it breaks these lows here. You can almost put a line across the bottom here, and you can bunch these prices all together. Here's the top, and when the market breaks the low here, then you've got the beginning of downward momentum. So quite a few traders would enter their trades short here, just as the market comes down past this line here, and bet on the market making a low around about the open, the 8 o'clock open level. I generally wait for a little bit more evidence, and I wait for a break of the 8 exponential moving average. And so we got the break of the exponential moving average. This bar here actually closed below the 20 moving average, which is a great sign. And the bulls then had a slight revival. They pushed the market back up, but they pushed it back up to just close under the 8 exponential moving average. So we've got a higher high, a lower high, market comes down, nice strong red bear bar here, closing below the 20 EMA, market pushes back up to the 8, just under the 8 EMA, and for me that's a fantastic signal. It's one of the signals that I look for. This is one of my trademark trades, and we've also got a little bit of a trap here as well. As this bar here opens, you can see that the market pushed up to just higher than the high of this particular bar. That's absolutely perfect for a short trade, because it means that you've got bulls who push the market up. They're trapped in their trades here, and as the market comes down and breaks the low of this bull bar here, the low of these two bars, then what will happen is that these traders who entered long here hoping the market goes up and makes a new high, they'll exit their long trades, and that means they're selling. So you've got bears who are selling because they're expecting the move down, and you've also got the bulls who are in their trades, exiting their trades and selling as well. So that's called double pressure. So my trade entry was just as these two bars were broken to the low here, I entered my trade short. My stop for this particular trade was nice and tight, just above these highs here. The reason that I put it there rather than up here, because I know that we've got a double pressure trap that's just occurred. If the market goes back up here, the chances are that I'm trapped in my trade here, and so I won't be the only one, and the chances are that the market would have gone up and made a new high. So I can be fairly sure that I'm wrong if the market reaches this particular level here. And so that's where I put my stop there. It also means keeping it nice and tight, that we've got a nice risk to reward potential trade. I'm often looking for, on these particular trades, 2-to-1 reward to risk. So with my target down at the 12,600 level, you can see that we've got a potential of just about 2-to-1 reward to risk on this particular trade. So that's exactly what I'm looking for. So the market comes down and then it pulls back slightly. That's absolutely fine. And this here, this tiny bar here, this is an inside bar. The high, the low, and the body of the candlestick are inside the high and the low of the previous bar here. And this is an outside bar because its high and its low are outside the high and the low of the previous candlestick bar. So that particular combination, an outside bar followed by an inside bar, when the low of that inside bar here was broken, then you can be fairly sure that the trade's going to work out, and everybody agreed at that particular stage that the market was coming down, and it reached the 12,600 level quite comfortably. So just to confirm then, we've got a downward leg, trend line broken, the market pushes up, it reaches the pre-market highs here and then stalls. You've got a higher high, a lower high, and the market starts pressing down. We've got a trap in here, the bulls who were trying to make a higher high and a breakout of these highs here. They were hoping for that. They're trapped at the top of this candlestick here, and as they exit, we've got double pressure and it creates the outside bar. There's an inside bar as the bulls fight and hope that they can press the market up, but to no avail. The market, the majority of market participants are selling, and the market comes down and gives us a nice 2-to-1 trade. So one of the reasons that I've got an indicator, this MACD indicator on the charts, is because I often use this for confluence. Now, for every one of my trades, I'm looking for three things, call them the 3 C's. I'm looking for context, I'm looking for content, and I'm looking for confluence. So context is, where is price action, where is my likely trade going to take place in the context of previous price action. We're at previous price highs here, pre-market highs, and so the context is good for a short trade. The content, higher high followed by a lower high followed by a break, this block of price action here, break of that gives me excellent content. And as the market pressed back up and rejected below the 8 exponential moving average, that just cements the excellent content that we get within the trade. And the confluence for me is that the MACD, the moving average convergence divergence indicator, is diverging. We've got a higher high here, lower high, and another lower high, as the market presses up. So price is making higher highs, the indicator's making lower highs, and it starts, you can see the slow line on the indicator starts moving down here. So as I'm entering my trade, the slow line of the indicators pointing down, the fast line of the indicators pointing down. I've had a divergence in here and the market's below the moving averages. That's all perfect confluence and just right for taking this particular type of trade. And you can see that the market did bottom out at the 12,600 level and then started moving back up. And again, you could draw a trend line down here across these highs, and when the market broke that particular trend line, it started pushing up again. The price action wasn't perfect for me in here. You've got this high to contend with, and then there wasn't much room up to these lows here where the market eventually stalled. So just the one trade within this couple of hours, within certainly the first hour of proper trading within the DAX. Hope you found that useful. If you're interested in learning to trade, I'd love to teach you. Got a couple of online training courses, a Forex and a day trading training course with all of these type of moves explained, and it'll help you to read the price action and understand how the pros seemingly take money at will from the market. It's all about understanding the dynamics of supply and demand and how the prices on the chart interact with these supply and demand dynamics. And once you understand all of this, you can see repeatable patterns within the price action, and we'll teach you how to build a system with good probability and good risk to reward within your trades. So hope you enjoyed that, hope you found it useful. My name's Anthony Beardsall. Join us at excellenceassured.com/trading for more on learning to trade, and I look forward to discussing more in the next video.